Hey everyone, and welcome. Today, we're going to pull back the curtain on a trading strategy that's all about aligning yourself with the biggest players in the game. We're talking about the smart money entry model.
Have you ever been there? You're in a trade, everything looks absolutely perfect, the setup is clean, and then bam, the market just whips around out of nowhere and smacks your stop loss. It feels completely random, right? But here's the thing. What if it's not random at all? What if there's a predictable, hidden logic behind those sharp, frustrating moves? Well, this brings us to the two big players on the field. On one side, you have the retail trader, who's usually focused on standard indicators and chart patterns. But on the other side, you have smart money, and they are focused on one thing and one thing only: liquidity. See, while retail traders are following the herd, smart money is actually creating the trend. They do it by hunting the very liquidity that retail traders provide.
So here's how we're going to break this all down today. We're going to start by really understanding who the players are. Then we'll decode the market's blueprint, the map they use. After that, we'll pinpoint the high probability zones where they act, find the specific confirmation signal they leave behind, and finally, we'll put it all together in a complete execution model. Let's dive in.
All right, first up, let's get crystal clear on the two sides of this game: retail versus smart money. It's crucial to understand who they are and, more importantly, what really drives them.
So when we say smart money, who are we actually talking about? Well, think of the heavy hitters, the major banks, the huge financial institutions, massive hedge funds, even sophisticated algo traders. What do they all have in common? It's simple. They have enough capital to literally move the market. And their goal? It's surprisingly simple. It's not about some complex pattern you've never heard of. It's about one thing: collecting liquidity. Think of liquidity as a giant pool of orders sitting in the market, especially all those stop losses from retail traders. Smart money needs this pool to fill their own massive positions. This leads us right into the market's blueprint, because where we might see chaos and random price swings, smart money sees a totally predictable four-phase cycle. It's like a map they follow time and time again. The cycle kicks off right here, in a phase called accumulation. This usually happens after a long, painful downtrend. The market just seems to go sideways, stuck in a range, and while fearful retail traders are selling out, smart money is on the other side, quietly buying up all those positions at a discount. This is what carves out a key demand zone. Once they've accumulated enough, the markup phase begins. This is when price finally breaks out of that range and starts a real uptrend, creating that clear structure of higher highs and higher lows. And all throughout this move up, smart money is strategically adding to their positions, basically fueling the fire. Then, at the very peak of that uptrend, we see the mirror image: distribution. The market goes into another sideways range. But now, retail traders are full of FOMO, that fear of missing out, and they're buying like crazy. And who do you think is selling to them? You guessed it, smart money. They're offloading their positions at a premium, and this creates a supply zone. And finally, after that distribution is complete, the markdown begins. Price breaks down from the range, a downtrend takes hold, and the entire cycle is now complete, ready to start all over again. Okay, so we get the cycle, we see the big picture, but where exactly do we look on the chart to get involved? Now we're going to talk about identifying the high probability zones. These are the key landmarks on that smart money map. One of the most important landmarks is something called an order block. This is typically the last opposing candle right before a huge, explosive move. It represents a massive concentration of unfilled orders from smart money. It's basically their footprint left on the chart, and it's a place price will very likely revisit in the future. Another one of these key areas is the fair value gap, or FVG. This happens when price moves so aggressively that it leaves an imbalance, a literal gap between the wicks of three candles. This little gap is full of pending orders, and it acts just like a magnet, often drawing the price right back to fill it before continuing on its way. So, we've identified our zones, we know where to look. Now we need to wait for the trigger, that all-important confirmation signal that tells us, okay, it's time to pay attention. And that signal is called a change of character, or you'll often see it abbreviated as CHOCH. This is the first clear sign that the immediate short-term trend is shifting, and it almost always happens right after price has tapped into one of our key zones, like that order block or FVG we just talked about. All right, it's time to put all the pieces of the puzzle together.
This is the execution model. This is what turns all of our analysis into a precise, repeatable entry strategy. The entire strategy really boils down to this 5-step model. First, you identify your zone, your order block or FVG on a higher time frame, like the 4-hour. This gives you the big picture context. Step 2, and this is maybe the hardest part, you wait. Be patient. Let the price come to you. Once it enters your zone, that's step 3, you drop down to a lower time frame, like the 5-minute. This is like using a microscope. Step 4, you wait for confirmation. You're looking for that change of character to show you the tide is turning in your favor. And finally, step 5, you execute. You enter the trade fully aligned with that institutional flow.
You see, ultimately, this is more than just a technical strategy. It's a complete shift in perspective. You stop being the liquidity that gets hunted, and you start following the tracks of the institutions that do the hunting. So I'll leave you with a question to really think about. In your own trading right now, are you moving with smart money, or are you simply providing their liquidity? The answer to that could change everything.